Hi everyone, Brian from Bearable Traders here. It is Saturday, June the 4th, and this of course is the weekend video. We'll take a look at what happened last week in the markets, take a look ahead, see what we might have coming down the pipe coming week, and a couple stocks that I'm watching for the week ahead here. So let's get down to it. Starting out with a review of last week's action in that shortened trading week, Monday the holiday. So we kind of chopped Tuesday and Wednesday, pulled back a little bit. Thursday just ripped on, we had some positive earnings out of some companies like CRM and Capri, and PMI was a little bit weaker. But Thursday we gave back all the gains due to that strong jobs report that came out. A lot more jobs created than was expected, of course, with economic good news. Is basically bad news for the markets right now because, of course, a strong economy means the Fed could be more aggressive in their tightening and interest rate raising. So subsequently, we did have a little bit of a down week after that big week the previous week. So off just about of 1% on most of the indexes, and the IWM actually fared the best, the small caps down only about 1/3% there. And as always, or not as always, but it certainly has been the case of the last month or two, energy remains strong, probably the only green sector on the week. Healthcare and real estate were the weakest, but the rest of the sectors were in the red as well. On the treasuries, we did sort of inch back up to this 3% level. We're getting real close again. 2-year was following it up as well from the previous week at 2 2/3% on the 2-year. U.S. dollar, after had a big run up, hard sell off, and now seems to have sort of stabilized here. So it's hard to say where it's going to go, but it certainly kind of settled itself into a range for at least a little while, maybe. So. And before we get looking at some charts here, just a quick ad for my new book on Amazon, not how to swing trade, that's the old one. Profiting as an Active Trader just came out May 31st this week. And hoping that people find some value in some of the content there in that book. So let's flip over here and start looking at some charts. And here we go. Let's start out with the 2-year and the 10-year Treasury notes. I always like to keep an eye on those, see where they're going. See, I had this big run up, and we now sort of in a long period of bit of a period of consolidation over the last month and a half. We are still holding in around this 2.6 level here on the 2-year. Maybe looking at a possible break higher after we've had this period of consolidation. So certainly with the strong jobs number that came out, might be more reason to think that interest rates are going higher. Possibility of, anyway. So question is this an ABCD pattern? We certainly have seen some ABCD patterns here as this 10-year Treasury note yield goes higher. This again, this pullback after a big run up here. There was a big run from here to here. Only natural that we have a bit of a pause there and possibility of a continuation move. Certainly this 3.1 level will be an area where we'll watch closely to see if it breaks higher. Higher interest rates probably not great for the markets. And you can see here we certainly had a bit of a choppy week. I think it's going to be sort of a theme as we go through the indexes here, but you can see here a couple of pull day back days on Tuesday, Wednesday, big bounce Thursday, and not a bad looking candle there, even though we were down about 1/3 of it on transports on the Friday. Well off the low of the day and a bit of an indecision candle, but again, sort of biased to the upside on that one. And again, not looking too bad, really just finished flat on the week on the transports. Let's take a look at the Dow. Again, sort of same theme here. We did sort of top out here on that previous week, and now just kind of consolidating these gains that we made on the previous week here, and a bit of a pullback on Friday after that strong jobs number. Again, we were pretty extended. You can see a lot of the stochastics really got quite extended. MACD really accelerated to the upside and now kind of flattening out, consolidating the gains. Only a down about 1% on the week. Sort of same comments with the tech sector. We did We did attempt a breakout on Thursday, and Friday sort of big pullback. Not quite as nice looking a candle for Friday, so Q is still under pressure a little bit, and you can see on the weekly here, see how the volume's really dropping off. If you look at the Dow, same thing. These weekly volumes are really dropping here, and so it just shows a lack of probably institutional, but retail participation as well is starting to drop. The SPY again, same sort of comments. We seem to be in a consolidation week here. Again, volume just keeps dropping here on these moves, so no conviction really one way or another. The IWM, same story, bit of a breakout Thursday, pullback on those numbers Friday, and we've sort of set this range here where we could break out with all these indexes above Thursday's high. Certainly, again, a nice, sort of not a bad looking weekly candle there on the IWM, although again, volume very light. The VIX, despite the fact that we were down on the week and on the day, it just kept dropping. Even though we were down on the day, Friday the VIX dropped, and again the VIX, just no fear in the market in terms of people thinking that there's going to be a big flush, which makes me think that we could possibly squeeze to the upside. The dollar, huge run up, big drop, stairway up, elevator down, and we're just sort of in this range here, and I mentioned this, we're kind of at that 50% pullback level and consolidating around there and just trying to figure out a direction. Bitcoin is really struggling here. Again, it's just seems to be just hanging around this 30,000 level. I think if we start to edge lower and drop below 28,000, there will be another big flush there in the works. And you can see here, not a very nice looking weekly candle. Definitely a sort of a negative doji, if you want to call it that. Let's take a look at a couple of stocks I am watching. CCJ is still watching. Uranium energy has been strong. The strong sector, as I've already mentioned, and CCJ is kind of sitting here right now. I did have a position in it. I took it off because it got toppy here, and I'm just waiting for it. If it can break through 26 and this moving average here, we could start to head back up into the 30s. So I got an alert set for that one. Break at 26. ChargePoint, I really like this one. This one reported, I think, last week. And we had a move up on previous week, pretty much like the markets. Pulled 2 days of pulling back, and on a down day, which was Friday, ChargePoint charged higher. So really liking the price action on ChargePoint, and I think it possibly could go higher. So I'll be looking for a possible entry on that. On Monday, you can see here really good volume, stochastics. Strong RSI momentum, looking good to the upside on ChargePoint. I'm liking IWM. IWM's breaking out again, a stock that was strong on Friday despite the fact that we did sell off. Always like to look for those anomalies. But you can see here this 134.50, 135 level we just broke out from. IBM looking like it might be going higher here. So this is a monthly chart. Let's take a look at a daily here. Again, really nice price action on that on Friday, despite the fact that we sold off. Volume picked up a little bit there. So yeah, liking IBM, kind of blue. Starbucks is kind of interesting here. I mean, it's put in what it looks like a sort of a messy head and shoulders. You've got your one shoulder, the head and inverse head and shoulders, and then the right shoulder. Now we seem to be trying to break out here. I think sort of this $80 level could be an area that could be interesting. And of course, sticking with what's working, and that's energy. Obviously, energy continuing to push higher here. It's the oil price, USO, and the XLE. This would be the sector to play. The strong oil, which is highly correlated to the oil price. So you've got companies like Chevron, Exxon, Phillips 66, all part of this this select sector ETF that's in this fund here. So good way to play the energy sector. And that's about it. So I'm watching right now. Wrapping things up here, let's see, we've got all these levels that we're at with the Dow, the Qs, the SPY, and the IWM all a little bit down from last week. You can see here support and resistance levels for these, and they're getting pretty narrow, these support and resistance ranges. So we are kind of narrowing into some ranges as we consolidate in this area. So we'll be watching these levels next week for either a break to the upside or a break to the downside. My bias is actually a little bit more, is possibility for more upside. Just my bias there. There's really, I couldn't see any economic events really of note for the early part of the week. And of course, we've got a bit of earnings coming through this week. Most of the earnings already passed for the last season, but we still have a few trickling in here. FU2U is Chinese stock, I believe. We've got Coop Software, Play and Schmuckers, and Trip.com on Tuesday, and Campbell's. That'll be interesting on Wednesday morning with N5 after the market close. So that's it, everybody. Hope you have a good rest of the weekend. And of course, we will be starting pre-market show at 8 a.m. as usual, Monday morning, and then 8:30, looking at all the stocks to watch, stocks in play, and of course our members will be trading the market open at 9:30, and hope to see you all there at one or all of those events. Take care, everybody. Have a great rest of the weekend, what's left. Bye for now.